Does the flag still fly high for the UK and its economy? Is the public sector spending spree over? With public sector borrowing requirement next year set to peak at 175 billion, and this is based on optimistic projections of 1.2% increase in 2010 and 3.5% in 2011, this black hole must be closed. The next spending review for 2011-2014 is going to be a massive headache for whichever political party is in government. Already, the growth in public spending has been slashed from 1.1% in 10-11 to 0.7% in 11-12, with capital investment down from 44 billion to 22 billion a year by 13-14. So looking at a number of key sectors, what's happened to the education mantra of Tony Blair? Looking at the LSE debacle and the 144 stalled projects, the 300 million re-announced in March has enabled 8 schemes to restart. And yesterday, Alistair Darling announced a further 300 million would be injected. Not the large shot of adrenaline the colleges and the construction industry were seeking. Has the Building Schools for the Future programme fared any better? Commitment is reaffirmed, but questions still remain over how long the current rate of investment will continue. The recent move from waves of investment to a rolling basis does give more flexibility to the government to manage the rate of investment, and the words in the detailed script say, in line with available resources. This will send warning signals to local authorities who will seek to accelerate their programmes and be first in the queue. The market in housing seems to have fared somewhat better, with a further 400 million to unlock stalled housing developments and 200 million for social housing and shared equity schemes. This, together with the quantitative easing measures and increasing the availability of finances at low interest rates, will support this important market. Wave 6 prioritised PFI schemes in the housing market are also expected to be announced shortly, with a value of nearing 2 billion. Moving to health investment. With the government having met their 2010 target of 100 new hospitals, we continue to see a significant shift away from large new hospitals to PCT and GP surgery schemes, and 100 million has been brought forward for these facilities. The efficiency and the value for money drive, which was a key part of the budget, is also a cornerstone of the new express lift model. Finally then, what is the outlook for PFI? The budget reiterates the government's strong support, and the infrastructure debt financing unit has been created to support deal closures, with 2 billion set aside to support these schemes. My question is, do we see history repeating itself, when in the last recession, Norman Lamont conjured up PFI as a panacea enabling investments to continue off balance sheet? Sounds like an interesting opportunity for Alistair Darling. Jonathan Stewart reporting for Gleeds TV.